Is DoorDash about to deliver more than just dinner? With recent stock momentum heating up, could Dash be gearing up for a breakout or a breakdown? Let's dig in. This is Stock Talk Daily, and today we're serving up a full-course financial analysis on Dash that you won't want to miss. By the end of this video, you'll know whether Dash is a buy, hold, or sell, the financial numbers behind the buzz, and what the charts and Wall Street whispers are really saying. Current price snapshot. As of today, Dash is trading at 128.75, up 3.2% in the past week, riding high off a solid Q1 earnings report. Historical context. That's a far cry from its IPO days in late 2020, when it opened at 182 and then stumbled. But here's the twist. Over the past year, Dash has outperformed many delivery competitors, climbing nearly 32%. Market narrative connection. With gig economy stocks making a comeback amid improving labor metrics and tech rebound vibes, Dash is riding the same wave as Uber and Lyft, but with a twist. Logistics dominance P/E ratio and forward P/E. Right now, Dash has a forward P/E of around 45. That's steep, but not insane for a growth company still scaling. For context, Amazon traded at a higher P/E for years before turning mega profitable. EPS growth. EPS is up 82% year over year. DoorDash is narrowing losses and making real moves toward profitability. ROE and debt metrics. Return on equity is still negative, around 6%, not ideal, but improving. Debt to equity is modest at 0.3, meaning they're not dangerously leveraged. Anecdote. Think of Dash like a delivery driver who's finally figured out the fastest route and how to avoid tolls. Still late sometimes, but getting better every day. Support. We're eyeing solid support around 122, tested 3 times in the last 2 months. Resistance. Major resistance stands at 135. A clean break above that could trigger a run toward 150, especially if another earnings beat comes in. Dramatic prediction. If Dash breaks below 120, we could see a pullback to the psychological 100 level. SMA breakdown. 20-day SMA. Trending above it. Bullish short-term signal. 50-day SMA. Dash crossed it 2 weeks ago. 200-day SMA. Still below it, which is the next frontier implication. This positioning suggests Dash is in early uptrend territory. Momentum is building, but confirmation's needed. 6. Recent earnings and financial updates. Highlights from Q1. Revenue. $2.5 billion, up 24% year over year. EPS. 0.06, swinging from a loss of 0.41 last year. Gross order volume. Surpassed 17 billion. Translation. They're growing fast, finally squeezing out profit, and investors loved it. Match-up time. Uber Eats. Broader diversification but lower delivery margins. Grubhub. Losing ground, slow innovation. Instacart. Grocery-only focus limits scale. Dash advantage. DoorDash dominates in market share, has restaurant and grocery integrations, and is quietly becoming a logistics platform, not just a food app. Recent upgrades. JP Morgan. Overweight, price target 145. Goldman Sachs. Buy, price target 150. Citi. Neutral, but raised price target to 135. Wall Street is leaning bullish, but cautious. They love the growth, but want to see continued margin improvement. Social Pulse. Reddit's stocks is buzzing. Many retail investors are calling Dash the Amazon of last-mile delivery. Twitter sentiment is 62% positive, mostly driven by the earnings beat. Watch out. But beware the hype cycle. Momentum can flip fast, especially with high-growth tech plays. Risks. Labor laws like California's Prop 22. Profit margin pressure from rising driver costs. Growing competition from Uber and grocery-native players. Catalysts. Expansion into international markets. New logistics partnerships like the rumored Shopify integration. Strong holiday demand in Q4. Flashback. In 2021, Dash ran to 250 before tanking to 45 by mid-2022. Lesson. Even darling stocks can crash without fundamentals catching up, but now, fundamentals are catching up, and that's the different. Investor profiles. Aggressive. Consider a buy at 128 with stop loss at 120. Target 150. Moderate. Wait for breakout confirmation above 135. Conservative. Monitor for a pullback to 115. Support. Then enter slowly. Options traders. Bull call spread targeting a 135 to 150 range could be compelling. Alright, your turn. Do you think DoorDash is the Amazon of delivery, or just another gig economy flameout? Drop your thoughts in the comments. Bull or bear on Dash? Would you buy at this level, or wait for a pullback? And if you've made gains or losses on Dash, share your experience below. Key dates: June, next jobs report, critical for gig economy sentiment. July, Q2 earning. Watch for announcements from Shopify or international expansion. Any positive development could send Dash surging again. TLDR recap: Dash is growing fast, narrowing losses. Technicals are improving. Analysts are warming up. Risks remain, but so do huge upside catalysts. Stock Talk Daily Verdict: for growth-focused investors, buy on breakout or dip. For value seekers, it's a watchlist-worthy play. For now, disclaimer: this content is for informational purposes only and is not financial advice. Always conduct your own research before making investment decisions. Subscribe to Stock Talk Daily for your daily dose of stock market insights.